Thank you, everybody, for joining us today. We're going to take a look at USDA's May WASDE report and the wheat estimates from the NASS crop production report today. As you might know, there's going to be a lot of numbers involved, so I'm going to try to hit the highlights the best I can to give us an understanding of what USDA is saying today without trying to bog us down with too many details, but there will be a lot of numbers, I'll warn you. As we start, I just need to describe again for any newcomers, maybe to the grain marketing system and USDA WASDE reports, that this tends to be one of the bigger WASDE reports in terms of public attention. Not only are we getting updates of the old crop season, which is the grain that we produced in 2022, but we also have kind of the first serious attempts at USDA making estimates for the new crop season, which is the corn and soybeans being planted as we speak. And I imagine there's a lot of folks out there hopefully recording this or registered for this today that will listen later because they're probably in the fields right now. So I understand it's a busy time. So let's go ahead and dive into it, see what USDA says. And first of all, I need to start out with what I call my cigarette warning label, and that is that the estimates I'm about to tell you from USDA are very difficult to make, and they're not etched in stone is the point here. This is a correlation attempt at looking at USDA's ending stocks to use ratios, which is their estimate of the available supplies of corn and soybeans and wheat, in this case corn, and the comparison of how those May estimates compare to the final average farm price per bushel. And over the history of USDA doing these reports, I have to warn you that there's a very, very loose correlation. So statistically speaking, any statisticians out there, the correlation of determination is only 19%. So it's a very loose correlation. And the whole point of this is just to say that there is a lot of uncertainty in today's new crop estimates ahead. These are basically starting points for a conversation that's going to go on for months and in some cases over a year. So with that fair warning in mind, let's go ahead and take a look and see at what USDA said today for corn. This is the U.S. balance sheet for corn. On the far right column is the newest estimates for the new crop season, and specifically that's the year 2023 to 24. And then second from the left, that column where you see the red rectangle and arrow is the update of the old crop season. So let's start there first, and we'll go to the bottom in the rectangle, and we'll see that ending stocks of old crop corn are now estimated at 1.417 billion bushels. That's up from 1.356 last month. And there was a little change in the feed estimate, 25 million bushel increase in the feed demand estimate, but it was exports that took a hit. The export estimate for the current season was dropped by 75 million bushels. Now that's not a surprise to anybody that's been tracking the market lately. It's been very well known that our export sales of corn are having a very tough time and not comparing well to a year ago. So we had reduced demand estimate from exports. That increased that ending stocks estimate today by 40 million bushels, and that was a little bit more than was expected. Now let's move to the right column and take a look at what USDA says for the new season ahead. Now, you might recall from the March planting report, USDA is estimating 92 million acres of corn plantings. I still think that may be a little high. I'm personally estimating 90 million acres, but 92 is what USDA said. They're sticking with their yield estimate, 181.5 bushels an acre. They come out with a production estimate this fall of 15.265 billion bushels of corn. If true, that'll be a new record corn crop for the United States. Fall down lower. Now keep in mind, basically today's new crop estimates are projections of what's going to be produced this year. And I know we have demand estimates here, but it's difficult to take demand estimates seriously until you get more into the season. So I'm not going to give too much time to the demand estimates today, other than to say that surprisingly, USDA expects more corn exports in the new season, 2.1 billion bushels. We'll see if that's true, and my skepticism comes from Brazil growing a big crop right now. So anyway, we go down to the ending stocks estimate for the new crop season, and we see quite an increase, 2.22 billion bushels. Instead of an average farm price of $6.60 in the current season, we're looking at an average farm price now of $4.80 in the new season is USDA's initial estimate. As I say, there's plenty of time and uncertainty ahead, but this is the starting point for the new crop. And of course, we can understand with these numbers why December corn has been under so much pressure lately. It's a lot of new supplies and a return. By the way, if that ending stocks estimate is correct or close, it will be the highest in 7 years. So quite a jump in the new crop estimate. And by the way, it comes out actually very close to what we had in the 2018 to 19 season. So the 2018 crop year. All right, let's go ahead and see what world estimates did. Now this is the old crop balance sheet for world corn. And in the upper right corner, we see world ending stocks estimated at 297.4 million metric tons. That is an increase, a slight increase, I should say, on the old crop side. Here we go. Yeah, up from 295.4 a month ago. But there's a couple of surprises here. If you look in the second column, we see the crop estimates for Argentina and Brazil. And keep in mind that this is the corn crop that's growing right now in Brazil. So first of all, Argentina, that crop estimate kept at 37 million metric tons. The trade was expecting 35 today. As you may know, Argentina's had a horrific drought this year. And it seems to me that even though USDA did not reduce that corn estimate today, there probably will be a corn reduction for Argentina coming because local estimates are coming in lower for corn than the 37 USDA posts right now. So that continues to be a crop that gets smaller with time. In the case of Brazil, the previous estimate last month was 125 million metric tons. And by the way, that's a record crop. Brazil now estimated by USDA at 130 million metric tons. That is probably one of the bearish surprises of the day. And I say that because Brazil's own crop agency just came out yesterday with an estimate of 125.5 million metric tons. As I say, these are all record numbers, but to see USDA jump up to 130 is fairly surprising. Now, we've been watching this crop. We know it got off to a good start. It had good soil moisture, but right now, as our meteorologist John Baranek has pointed out and written about this week, the dry season has begun in Brazil. So it's hard to say, I guess, what USDA is thinking to go this high this early, but this is a crop that still has a long ways to go, and sometimes there's a risk of frost in the month of June. So that'll be something we'll continue to monitor. Let's go ahead now and look at the early glimpse of the new crop estimates for world corn. And I want to just point out that especially for corn and beans, these new world crop estimates are a long way off. So this not only includes the crop that's being planted in the U.S. right now and in the Northern Hemisphere right now, but this also includes the South American crops that will be planted late, 6 months from now, or no, we're in May already, sorry, in September, roughly. So South America has not even planted these crops yet, but USDA is making what is amounts to be a projection very far ahead in time. So I just want to point that out. The upper right corner, the ending stocks estimate for corn, world corn, is expected to increase to 312.9 million metric tons. That is up from this year, probably the most valuable number in this report is the early estimate of world production. And that corn production is expected to increase to basically 1.22 billion metric tons in the new season. That's up 6% from this season's estimate of world production. So obviously they're expecting Argentina to have a better year next year, but also they continue to factor in acreage expansion in Brazil. So we continue to see higher numbers for Brazil with each passing year, and that amounts to a lot of the increase that we continue to see in the world corn numbers. All right, let's move ahead now. The world corn supplies, we like to look at the metric which excludes China. It's very difficult to know just what's in China and what's not. And it's not like they're going to export a lot of corn anyway, since they're a major importer now. So looking at USDA's estimate of world-ending corn stocks excluding China, we see that estimate jump back up over 4 billion bushels once again. USDA estimating 4.27 billion bushels of global ending corn stocks. That's their initial estimate for the new season ahead. And that's what expansion in Brazil can get you. All right, let's look at some of the market clues just to see how that compares to what USDA is saying today. Well, I mentioned the cut in the export estimate for old crop corn was no surprise. And sure enough, this graphic, the red line, shows where we're at as of May 4th, which is the most recent report we have for corn. We're down 36% from a year ago, and a year ago is represented by the green shaded area. The black line is the 4-year average. So we're below both of those comparisons by quite a bit. And the bottom line is Brazil had a record corn crop last summer, and that really delayed the start of our export season in corn. And then, as you know, we went through a period where China was a pretty active buyer of our corn in the month of March. But more recently, we've seen some significant cancellations from China, and that's likely related to the fact that Brazil has a good-looking corn crop growing right now. So it's been a very, very tough year for U.S. corn exports. The speculative positions in corn, they have been heavily long through the past year, but with this year's fall in prices, we've seen a lot of liquidations from the long side of the market in corn. And just last Friday in the most recent CFTC report, we see that specs are now actually net short 60,000 contracts of corn. On the other end of that, corn prices are getting cheap enough where commercials are now long 113,000 contracts in the corn market. And typically, it's a good sign that corn prices are getting closer to a place where they represent good value for end users. And so there is a possibility of some support here ahead, but we haven't seen it yet on the market. The corn basis, this has been one of the most positive clues we've had for corn demand through the past year, and that basis continues to remain firm. Our DTN National Corn Index is 35 cents above the July contract as of Thursday night. That's the strongest basis we've seen in over 20 years. So we continue to see very strong feed demand for old crop corn over the past several months, and likely related to the lack of hay availability and some of the tough situation that livestock producers have been in over the last several months. Here's the new crop corn price lately. Now this is as of this morning. It's not a current update. By the way, December corn is down 6 cents as we speak. But as you can see, December corn has basically been in a fairly solid downtrend. It actually started last December when it broke below the 100-day average. Hasn't been above it since then. The green lines that you see on there is the 1-month range, and we've had significant breaks to new lows in late November, in late February, shortly after the Ag Forum triggered selling in corn. Then we found some support in early March when China started buying corn, but it did not take prices very high. We just basically rotated to the top of the 1-month range. And then in late April, we got hit with more news of China canceling corn, which has continued. We've seen three cancellations in 3 weeks. So new crop corn under a lot of pressure, and of course, now looking at a 2.22 billion bushel ending stock estimate is certainly not bullish for new crop corn prices at the moment. As I say, though, this crop is a long ways from being in the bin. We've got a whole year of surprises ahead of us. Take a look at soybeans now. The U.S. balance sheet for soybeans, same setup here. We'll start with the second column from the left, and we see a minor adjustment in the import estimate for old crop soybeans. It was increased 5 million bushels, and that resulted, if we go to the rectangle now, in a 5 million bushel increase in the ending stocks estimate for soybeans. So we went from 210 to 215 million bushels on old crop soybeans. Still a tight situation historically. It's among the lowest ending stocks estimates in 7 years for the old crop situation. Nothing else changing there. Export estimates staying the same, and I believe the crush also stayed the same. Moving to the right column now, we'll start with USDA's planting estimate for new crop soybeans, still 87.5 million acres from the March report. That's probably pretty close to what it's going to come into. My personal estimate's 88 million acres, but that's not far off. USDA also sticking with a yield of 52 bushels an acre. And I should mention that DTN weather team is still looking for what should be basically a favorable growing season ahead in the U.S. We're still going to have dry conditions in Nebraska and Kansas, but all the other major corn and soybean producing states ought to get some pretty decent weather and should not see the extreme heat that we saw a year ago. So we're supportive of a higher yield estimate at this point anyway for corn and soybeans in the year ahead. The production estimate on soybeans, USDA's estimating a record soybean crop this year, 4.51 billion bushels, if these assumptions prove out to be correct. And again, I won't go through the demand totals too much yet. You can see those on your own, except I will note that USDA expects slightly less exports in the new crop season, and that could possibly be related to the fact that Brazil came through with a record soybean harvest this year. So that'll probably be competing with us still in September, maybe October even. That could be tough on our export season. If we go to the bottom rectangle, we see that the new ending stocks estimate in the new season is 335 million bushels. That is obviously higher than the tight situation that we have right now. That's been pressuring the November soybean price. If true, that'll be the highest ending stocks for soybeans in 4 years. So, but again, the key phrase there being if true. We've got a long way to go. Average farm price, USDA is looking for $12.10 a bushel in the new season. That compares to $14.20 in the current season. So obviously more supplies, a smaller farm price, and that's what we're seeing in USDA's estimate here on Friday. For the world soybean total, I just want to mention this is the old crop, so this is the season that we're still currently in. The ending stocks estimate in the upper right corner was bumped up to 101 million metric tons. That was just a slight increase from what USDA said a month ago. But in the case of Argentina, the crop estimate was kept unchanged at 27 million metric tons. That was more, the trade was actually looking for that to drop to 24.4 million metric tons, so USDA disappointed traders there. I should also mention the Rosario Exchange recently came out with an estimate of 21.5. So again, we see the local estimates in Argentina coming in lower than what USDA is currently saying. So there's room for both the corn and soybean numbers in Argentina to come down in future reports. For Brazil, USDA bumped up that soybean estimate 1 million metric tons. It went from 154 last month. Now it's 155 million metric tons. That's very close to what traders were expecting in today's report. And then in Paraguay, the neighbor of Brazil and Argentina, last month USDA was estimating 10 million metric tons of soybean production. Now it's 8.8. So between the three of them, close to unchanged there for the entire month. What did USDA say about world soybeans in the new season? Well, in the upper right corner, we see a much larger ending stocks estimate. It might be the first thing you notice. Instead of 101, we're looking at world soybean stocks of 122.5 million metric tons. I'll also point out in the second column, the world production total of soybeans is just under 411 million metric tons. USDA is looking for an 11% increase in soybean production in the new season. That's a big increase. And again, that's going to be powered basically by a return to better conditions that USDA expects for Argentina. They're going to produce 48 instead of 27 this year. And in the case of Brazil, we're looking forward to more expansion that we continue to see every year. Instead of 155 produced this year, which is a record crop, by the way, they're looking to 163 million metric tons. So that expansion machine in Brazil just not slowing down any, at least in this report today. But as I mentioned, it's a long time before South America even starts planting this crop. So these estimates have a long way to go. As far as what kind of market clues are we getting, in the case of soybean exports, unlike corn, old crop soybean exports are doing very well. In fact, they're just down 1% from a year ago as of May 4. So far, 1.745 billion bushels of soybeans have been shipped. Again, that's very close to last year's pace. It's still well above the 4-year average. As far as soybean sales, we only need 81 million bushels more between now and August 31st to reach USDA's export estimate. So the soybean export side of demand continues to be very strong and encouraging for U.S. soybeans this year. But of course, right now our soybean sales have really slowed dramatically because of Brazil's new harvest being available to the market. So, and also as you can tell on this chart, by both the red line, the 4-year average, and the green shaded area, there's a time in, just as you get to about mid-February where the pace of U.S. sales makes a dramatic shift and starts to increase slower. And of course, that represents the arrival of Brazil's new record harvest. And we've already started experiencing that, as we typically do this time of year. So this remains a good supporter of the old crop supplies being tight in the U.S. this summer. On the crush side, we've seen the crush return reduced dramatically since early March. And if you notice, the blue line is the crush value, what the value that you get from soybean meal and bean oil from crushing the soybean. And that blue line has fallen quite sharply from almost $19 or $18.40 a bushel or so, now down to $16. So it's had over a $2 drop. Whereas if you look at the black line, the cost of the July soybeans, it has not had as sharp a drop. And so the point here being that we're seeing some rationing of demand as soybean supplies are tight in the U.S. July soybean prices are holding up well in relation to the product values, but that combination has brought the crush premium down quite dramatically. So it's really slowing the incentive and asking the soybean processors to slow their crush pace to accommodate the tight supplies of soybeans, and we'll probably see that continue through the summer. The spec positions in soybeans, like corn, have come back down dramatically just the past few months with the selling that we've seen, basically since March. At one time in February, specs were net long over 200,000 contracts of soybeans, and things were looking quite bullish in February. But now that we're at, in the early stages of May, those positions are now down to 75,000 net long. So it's still a large enough position to be vulnerable to some selling if soybean prices got hit, but certainly it's nothing like having 200,000 contracts overhanging on the market. So there has been quite a bit of liquidation already. Take a look, the soybean basis, not quite as strong as corn and hasn't been as strong as corn all season long, but still among the most favorable bases for producers that we've seen in a long time. Right now, the DTN's National Soybean Index of cash prices is 19 cents below the July contract. So we've seen a little easing in the basis, but it's still the third strongest that we've seen in 14 years. So it's still showing a favorable demand situation. And of course, the exports and the crush have helped that basis hold up very well. So the cash prices are holding up well. The new crop soybean price, November soybeans, really had its first early break of trend on January 19. But what really got soybeans going was when we had the bank failures take place in early March. And again, that's where having a lot of speculators long in your market can hurt you. And the specs panicked to the news about the bank failures, understandably, I suppose. And also we saw a dramatic drop in China's soybean prices. And so the combination of those two things also broke prices lower in early March. And of course, the prices have just been tumbling lower again, and we're seeing more lower trading here again today, down 26 cents, not taking the news well that we're going to have a much higher ending stocks outlook for new crop soybeans. So no soybeans continue to be under pressure, but we're getting down closer to that $12 mark, and things may slow up when after that big of a drop. Nagging outside concerns, I mentioned the bank failures. That's still a nagging concern that affects the market from time to time. And where there are net longs still in soybeans, it can be a source of some bearish days. If you notice on this chart, on top, I've got the S&P 500 index. Most S&P 500 companies are actually doing well, even though we're in this environment of high interest rates, and we've got these shaky concerns about the regional banks. But as you can see, the symbol, it's an ETF symbol, which is like a mutual fund for regional banks. KRE is the symbol. That's the chart on the bottom here. That's taken a very big hit ever since early March, and those regional bank stocks continue to be under pressure, and they continue to be a source of concern in the financial system. So from time to time, we do see outside selling influence in soybeans and really all the grain markets. All right, so far so good. Let's take a look at what USDA said for wheat today. I'll start with the rectangle on the left side. We see wheat ending stocks staying right where they were a month ago, 598 million bushels. Average farm price, $8.85, sorry. And the export estimate for wheat stayed unchanged, 775. I thought there's a chance that export estimate might be bumped a little lower today, but USDA held pat on the export estimate. Now in the right column, this is really the first specific estimate for new crop wheat production, which harvest is not that far away now, for those that will be able to harvest. So we're starting with a new planting area, 49.9 million acres. But as you can see, harvested acres are already expected to be 12.8 million less than what got planted, and we'll probably see that number get adjusted as time goes on here. The yield, 44.7 bushels an acre, gives us a crop estimate for all wheat for the entire season, 1.659 billion bushels. Now, basically, that's on par with what it's been the last 2 years, and these are some of the lowest amounts, some of the smallest wheat crops the U.S. has seen in a long, long time. So that production estimate also came in much lower than Dow Jones analysts were expecting today. They were looking for 1.78 billion bushels. Maybe they underestimated how much USDA would actually acknowledge the hard red winter wheat damage that we're seeing in the field today. But whatever the reason, USDA coming in with a lower than expected wheat estimate, 1.66 billion bushels roughly. The new ending stocks estimate in the lower right-hand corner is 556 million bushels. Of course, that's also lower than expected. The trade was looking for 602 for the new crop season. And if true, that will be the lowest ending U.S. wheat stocks in 16 years. So we continue to have a tight supply situation of wheat, and it'll be interesting to see if the prices get any more respect in the new year than they have the past several months. As far as the world wheat estimates, I'm jumping here right to the new crop estimates. USDA's ending stocks for world wheat totals is just slightly lower than this year's ending stocks estimate. This one coming in at 264.3. If we take a look at the current season, it came in at 266.3. So we're basically just taking 2 million metric tons off of the ending stocks estimate for the new season. Also, the production estimate is interesting here, coming in just below 790 million metric tons, is just slightly higher than world production was estimated last year. And I thought it's a bit interesting just to look at some quick comparisons of the major wheat producers. We're looking, USDA, I should say, is looking for a larger crop in the new season from Argentina, Canada, and the European Union. And of course, all three of those experienced some degree of drought in the previous year. Australia is expecting a smaller crop. El Nino tends not to be good for their production in the new season. Russia and Ukraine also expecting smaller crops in the new season ahead. So that's USDA's early prediction of how it's going to go. But roughly the same production worldwide, just shaking the players around a little bit, and roughly the same ending stocks, at least starting out. World wheat supplies, here again we use the metric which excludes China and takes a look at USDA's estimate of world wheat ending stocks. For the new season, that total will be 124.7 million metric tons, or as we refer to it here in the U.S., 4.58 billion bushels. If true, that'll be the lowest in 15 years. So we have U.S. stocks estimated at the lowest in 16 years, world wheat stocks estimated at the lowest in 15 years, and I guess I should add International Grains Council is estimating the lowest world wheat stocks excluding China in 10 years. So they seem to be very close to on page with what USDA is saying. Winter wheat estimates. I want to thank Kathy Myers for throwing this graphic together quickly for us today. This is the USDA state production estimates for winter wheat, not all wheat, but winter wheat. And of course, you can see on here the dark blue Kansas jumps out. Even though they're having a very tough year weather-wise, they're still going to be the leading producer of winter wheat with 191 million bushels. But keep in mind, that compares to 244 a year ago when we had drought problems in the Western Plains. So extremely tough situation here, especially for the hard red winter wheat states where drought has been a very tough issue really ever since planting and before. and that crop has had a very tough time. So even though there's rain in the forecast this week, it's not going to help a lot of the hard red winter wheat, and that's where USDA is starting out. Oh, by the way, I did not give you the classes, and I'm sorry I don't have a graphic, but I can tell you that winter wheat production was estimated at 1.13 billion bushels today. That was less than expected. Hard red winter wheat came in at 514 million bushels. That was less than expected. Soft red winter wheat came in at 406, which was 9 million bushels more than expected. And white winter came in a little less than expected at 210 million bushels. So overall, USDA acknowledging problems in the hard red winter wheat region, and coming in a little less than expected, about 28 million bushels less than expected in the white winter region of the Pacific Northwest. Okay, what are some of the things, other things that are important to know about wheat? Well, here's the basis for HRW. Our DTN HRW wheat index of cash prices is 27 cents under the July. If we compare that to basis at this time of year historically, we're still at the upper end of the range. It's actually the fourth strongest basis we've seen in 14 years, so going back to 2010. So it's still a good sign of a crop that is has limited supplies, and even though demand has not been stellar this year in terms of export sales, demands expressed as a basis has shown good domestic commercial interest. KC wheat, the spec positions, I think we've had an interesting change here, which will be interesting to see how it follows up. And by the way, July Kansas City wheat is trading up 35 cents as we speak. Chicago's up 7 and Minneapolis is up 10. But I wanted to point out on this chart that just recently, when the July Kansas City wheat price fell below $8, the specs actually jumped on board and added to their shorts. So now, as of Friday's report, which is I think as of May 2nd, there were over 59,000 contracts of specs holding net shorts or holding shorts in the market. And then the very next week, the prices dramatically reversed higher, closed over 50 cents higher, and so far we're up this week. And of course, today's 34.5 cent boost in the Kansas City wheat price adds to that. But it looks to me basically like a classic bear trap in terms that the specs kind of took the hook, added to their positions as prices were sinking to new lows, and then the market turned around quickly on them. So right now, that last little short sale that they had is probably not feeling too good at this point. Oftentimes we see that at turning points in the market, so that's where I'm somewhat suspicious that that may be what's happening here, especially for Kansas City wheat. We don't quite see the same dynamic in Chicago or Minneapolis just yet, but you never know what might be ahead. Of course, we have a much more dangerous situation for shorts in Chicago wheat, where specs are holding almost 1 billion bushels of soft red wheat short in that market, so they remain very vulnerable. The chart of July Kansas City wheat, which is the new crop Kansas City wheat, has had some sharp ups and downs, but basically it's been under bearish pressure since it making a high in early October. We saw a bearish break in November around Thanksgiving time, where it fell below the 100-day average and also made a new 1-month low. That bearish pressure has basically held steady on wheat ever since that time, in spite of a lot of choppy up and down action. But now with USDA acknowledging the tough situation in the southwestern plains and coming in with lower than expected crop estimates for HRW wheat, I won't be surprised if we come to find out that that sharp reversal in early May may have marked the bottom of the market, at least for a while. So obviously, I've been wrong for several months on wheat, but we'll see if this time the broke clock works out. So we'll see how that goes. In conclusion, thanks for bearing through a lot of numbers today. We have to say, at least from the new crop side, that today's report is bearish for both corn and soybeans. We're looking for much higher surplus situations. And obviously, December corn and November soybeans have been under a lot of bearish pressure and selling, anticipating the news of this report today. In the case of wheat, we have to say today's report was bullish. It came in less than expected on a lot of important metrics, and we're still looking at U.S. ending wheat stocks, actually not the stocks-to-use ratio, sorry, but the actual stocks themselves is being estimated at a 16-year low, and that hard winter wheat is being acknowledged of how tough a shape that situation is this year. Before we go to questions, I just want to point out on May 23rd, we're having another installment in our Ag Summit series. Check our website, free website, dtnpf.com, to find out about that. If you'd like, we'll give a little more in-depth, up-to-date assessment of what the market looks like and what we expect ahead. And then our next WASDE report will be out on June 9th. So thank you. And Andy, good time for questions.
Yeah, I do not have any questions for you, Todd, so clearly you covered a lot of topics thoroughly. I did want to make one comment about that Ag Summit series, which is it is a free webinar series. It's about 3 hours long. And yeah, it's basically a report kind of from the fields, how is planting season and the start of growing season. So I say that because I'm involved in that Ag Summit series. And
well, that's awesome. I know it's always good.
Yeah, so I think that covers us for today. So I'll just say thank you to everyone. Oh, I do have one question that just came in. Last second here.
Okay.
Do we anticipate the HRW Chicago wheat to widen?
I would say not much more. It's a tough call. I would say not much more is going to be my short answer, because given the fact that the weather situation is well known and has been well known, driving that difference farther apart for several months, it wouldn't surprise me if today's estimates kind of tone that down now. And in addition to the fundamental weather estimates, the Chicago wheat price has really been taken from a fundamental perspective far too low and too cheap. And at some point, and of course it's the big specs that have been weighing down that Chicago price, at some point that has to start unraveling. And I wouldn't be surprised if today maybe was a catalyst to get that started, but we'll see.
Yeah, and related question that just came in was, do you think the higher HRW price will somehow prop up corn and sorghum prices, especially in Western Plains?
I would not count on that, to be honest. Corn has just such a tough bearish argument right now, and Brazil is the main culprit there, and it's just fighting an uphill battle. Now on December corn, we are getting down cheap enough, and there's still plenty of season ahead, that really I expect that selling to abate on December corn somewhere near the $5 a bushel mark. We'll see if that holds true or not, but at some point it's going to be difficult for shorts to keep selling December corn. Well, there's so much yet we don't know. And of course, one of the big unknowns is going to be the acreage report on June 30th. Just how many acres did get planted, and is there going to be some prevented acres around North Dakota, for instance?
Well, your conversation is leading to more questions. Not sure they're necessarily related, but I'll ask the next one, which is, what are you hearing this week for planting progress in North Dakota?
Honestly, I haven't, and I've asked around, but I have to expect that they're dodging rain and taking advantage of warmer temperatures. but I'll just admit I don't have a good feel for just how wet the fields still are there. And if you hear anything, I'd like to hear myself.
Okay, and we got some more coming in. Do we see a possible rebound in old crop corn with a weather concern, even with negative demand new?
Yeah, I think that's a fair possibility because even though the export sales have not been good, the corn supplies themselves are not especially big or burdensome. So I still think there's room for maybe a summer rally. You know, all it takes is a little hot forecast in June and July. We could still have some volatile fireworks ahead of us before the crop disappears.
And I had a feeling we'd have one of these. A Ukrainian question. Is there a risk of more Ukrainian shipping disruptions for wheat exports? I think a lot of us have heard different stories about that. So
yeah. So who knows if Russia's going to agree to extend the deadline beyond May 18 or not. They obviously have been disrupting exports by not participating in the inspections or, fully cooperating. They've been, intentionally slowing exports out of there. And my concern is fighting is going to pick up this summer, one way or another, no matter which side instigates it. But I just don't think the borders are going to be the same by the time we get to fall that they are right now. And that's my biggest concern about Ukraine, is how all that goes. So yeah, there's continues to be a lot of risk in Ukraine with a very active summer ahead of us.
Yeah, I personally have read articles about Ukraine and that the Russians may start targeting agricultural infrastructure since
yeah. Farming in Ukraine is probably 4 times harder this year than it was last year, and it's just not getting easier.
Awesome. Okay, I think that got it. We had a nice flurry at the end there, but that does, I think, finish all the questions we have. So I'll close us down here. I just do want to say thank you to everyone for joining. Obviously, an important WASDE call. Thank you, Todd. As a reminder, we have recorded this event, and we will put a rebroadcast link up within the next 48 business hours. And Todd, I don't know if you want to advance your slide. I know we always like to give.
Oh yes, sorry.
A little contact information should anyone choose to reach out. Todd's gracious enough to put his contact information here. So grab that as you can. And beyond that, I'll just say thank you once again. It concludes our event for the day. And I hope everybody has a wonderful Friday and a wonderful weekend.
Take care, all.